In this section, we will learn how we record income that is received in advance. Income received in advance is an amount of income received in the current accounting period, but will only be earned in the subsequent accounting period, which is the next accounting period. Now you recall that a business will only record income when it is earned. That is, when the business has provided the goods and services. For income received in advance, the business has received the money but has not provided the goods and services yet. Therefore, this money received is called unearned income and is not considered as the income of the current accounting period. It is treated as a current liability. As the business owes the customers goods and services and has to provide them in the near future. Now let's look at an example to illustrate what is income received in advance. We'll look at example 4. Now example 4 says that Beauty and Health charges an annual membership fee of $2,400. A new member who joined from 1st of May 2013 paid $2,000 for the period 1st of May 2013 to 28 February 2014. The financial year ends on 31st December. You should notice that the member has paid for May to December. This is paid, which belongs to the current accounting period. But he has also paid for January to February 2014, which belongs to the next accounting period because the financial year ends on 31st December. So this business will not have earned this income that was received for January to February 2014 as at 31st December 2013. So this part of the income received must be treated as unearned income at the end of the financial period, which is 31st December 2013. Now let's take a look at how we record this in the general journal. Now when the business receives payment for the membership fee on 1st of May, it will record the first journal entry of debiting cash at bank and crediting membership fees revenue for the amount received, which is $2,000. So we will debit cash at bank and credit membership fees revenue for $2,000. Now on 31st December 2013, which is the end of the accounting period, the business will have to make adjustments for the unearned income, which you see 400. How do we get the unearned income amount? Now notice in the question that the annual membership fee is $2,400. Annual fee $2,400. So if $2,400 is for 12 months, the membership fee will actually be only $200 per month. We mentioned earlier that the unearned income is for 2 months from January to February 2014. So that will be 2 times 200, which will actually be $400. We also mentioned earlier that income received in advance is a current liability. Now for liability, credit is plus, debit is minus. So in order to increase the amount for membership fees received in advance, we will credit the amount for $400. So we credit $400. Membership fees received in advance. At the same time, we will debit membership fees revenue for $400. So membership fees revenue for 400. Now remember that membership fees revenue is an income account. So credit is plus, debit is minus. So if we debit the membership fees revenue for 400, we are actually reducing the membership fees by 400 for the year 2013. We have to do this because this 400 is the revenue that has not been earned in 2013 and should not be included in the income for the current year. Now we will take a look at the accounts to have a better understanding of the effect of the journal entries above. Sorry, before that, we also have to, because this is an income account, we have to post this to profit and loss. So we have to debit your membership fees revenue and credit profit and loss to transfer the amount to the income statement. Now what would be the amount to transfer? It will be actually 2,000, which is what the whole sum that you receive minus of the $400 that you receive in advance, so will be 1,600. So now let's take a look at the membership fees revenue account. Now when the business received the $2,000 membership fees from the new member, it will debit cash at bank and credit membership fees revenue account. Now we are looking at the membership fees revenue account. So we will write $2,000 in the credit column. That is on 1st of May when we receive. The account that we debited is cash at bank. So we write it here. Write in the balance of 2,000 credit. On 31st December, which is the end of the accounting period where the adjustments are made, the journal entry was to debit membership fees revenue and credit membership fees received in advance. So we will have to write $400 in the credit column. Sorry, in the debit column. And write membership fees received in advance over here. So what will be the balance now? You take 2000, subtract 400 will be 1600 credit. Because this is an income, a revenue account, we will have to transfer this amount to profit and loss. So we write profit and loss since you note that there is a 1600 credit balance in this account. In order to make it to 0, we have to debit 1600 so that the account will become 0. How about the membership fees received in advance account? Now, you remember that we mentioned that this is a liability account. So liability means credit is plus, debit is minus. Now recall also that we only wrote the journal entry on 31st December since these adjustments are only made at the end of the accounting period. So the date here must be the date of the end of the accounting period. For this case is 31st December. Now the journal entry was to debit membership fees revenue, credit membership fees received in advance. So we have to write $400 in the credit column and write membership fees revenue here. Because that is the account that we debited. Remember to write in the balance of 400 credit in the balance column. Now in the following year, which is 2014, we have a balance brought down. So we write the following year. For this case, the beginning is 1st of January, and we write balance brought down of 400 credit. Now for balance brought down, there should be nothing in the debit and credit column. Now, as in the previous parts of the video, for this case, we will also have to make reversal entries at the beginning of the next accounting period in order to ensure that this income that was received in advance is included in the income statement as earned income for the next financial period. We will illustrate this by continuing with the example that we have previously. Now in our example, we note that there is a credit balance of $400 in the membership fees received in advance account as of 31st December 2013, and that was brought down to 2014. So our journal entry on 1st of January 2014 will be to debit membership fees received in advance by 400 and credit membership fees revenue by the same amount. So we debit membership fees received in advance and we credit membership fees revenue. For the amount of 400. so that the balance of the membership fees received in advance account will be reduced to 0. At the same time, take note that we have credited membership fees revenue account by $400. Now this is a revenue account, and crediting it means we have increased the revenue by $400 for 2014. Now do you see what has happened? We have transferred this $400 that was paid in 2013 but was not earned to the income in the year 2014 as it is being earned in 2014. Now we will take a look at the accounts for a better understanding. Let's take a look at the membership fees received in advance account. Now this is what you had recorded in 2013, and you have the balance brought down as of 1st of January 2014. So you have a $400 credit balance. Now remember that the main purpose of the reversal entry is to reduce this balance to 0, as well as to transfer this unearned income to the membership fees revenue account for the year 2014. As we can see that we have a credit balance of $400 in this account, we have to debit this account with $400 so that the balance can be cleared to 0. At the same time, we credit membership fees revenue. So we write, so there's a $400 debit, and we write the account here, which is membership fees revenue. Now where's the balance now? It will be 0. Now let's take a look at the membership fees revenue account. Again, this is what you have from 2013. You have already transferred the $1,600 to the income statement for 2013. Now when we debit the membership fees received in advance account, we actually credit this membership fees revenue account by $400. So we have a credit of $400 here. When you debit this, you credit this. So the account that you debited was membership fees received in advance. So now you have a $400 credit balance in this membership fees revenue account. Now as mentioned earlier, this is a revenue account, so credit means plus. When we credit this account, we have increased the membership fees revenue by $400. Now this is correct, as this $400 which was unearned in the year 2013 will now be earned in the year 2014. By doing this adjustment, this income will be adjusted to the correct accounting period. We shall now look at the effects of doing adjustment entries on the income statement the income statement and the balance sheet for the year 2013. Let's take a look at the income statement first. Now for the membership fees revenue, the journal entry earlier will cause a deduction in the revenue account. So write your working here. So you have your income statement. So you have a membership fees. Revenue. So do your working here. The amount that you received was $2,000, but $400 was unearned. So you have to subtract this amount. So you only have $1,600 that was earned for the year 2013. Now, without the balance day adjustments, the unadjusted trial balance will actually show the actual amount paid, which is $2,000 during the year, even though the amount $400 has not been earned. Therefore, you have to subtract this $400 from the $2,000 to adjust for the amount earned, which is $1,600. How about the balance sheet? Now, we have mentioned that this membership fees received in advance is a current liability. So under your current liabilities, it will appear here. You have your membership fees received in advance. For $400. Now, do remember that these are amounts at the end of the accounting period 2013, before the reversal entries are made the following year. That's why there is still a balance in the membership fees received in advance account under current liability. So what are the effects of doing the balance day adjustments for the income received in advance? Sorry, what are the effects of not doing the adjustments? Using the above example, you can see that the membership fees, which is under income, will now be overstated by $400. Now, because this income, this membership fees revenue is overstated by $400, your total income will be overstated by $400. Therefore, your profit will now be overstated by $400 because your income is overstated. There will be the effects on the income statement. How about the balance sheet? Now, if you had not recorded the membership fees received in advance, you will not have this current liability. So your current liabilities will be understated by $400. Now, how about equity? Your equity will be overstated by $400 because your profit is overstated by $400. So for income, we can see that there are two types. One, your income receivable. The other type will be income received in advance. For both, you have to make adjustments. How do we do it? If you see that the income is an income receivable, that means you have not received the cash yet, but you have earned the income, you have to add to what you have received for that year. And that will be your total income earned for the current accounting period. However, if you have income received in advance, then what you need to do is you have to subtract this income received in advance from the amount that you have received to get the income earned for the year. So that will be all for this chapter. Thank you for your attention.